Hello to everyone. I'll explain you. Hello to everyone. I'll explain you how to compute income from house property. I'll post the problem in the WhatsApp group. I'll read the problem. Mr. Arunachalam, a senior citizen, owns a house in Hyderabad, which is let out on a monthly rent of rupees 12,500. So he has let out his house for a monthly rent of rupees 12,500. So that becomes actual rental value, right? Now he incurred the following expenses. Municipal taxes 16,000, repairs 12,000, lift maintenance 4,800, interest on housing loan paid 12,000, other information, municipal rental value 7,000 per month, rent of similar house 10,500 per month. The tenant did not pay rent for 1 month, that is Feb 2017. Now we'll change the assessment year to 21-22 and we will make it Feb 2021 and was asked to vacate during March 2017. So we'll convert the year into 21. March 2021, the house remained vacant. Interest on housing loan due is 6,000. Calculate income from house property for the assessment year 21. We change the assessment year, we change the month and the year. Now you have to the performer is to first calculate gross annual value. That is the gross. How to calculate gross annual value? Step 1. You have to compare with municipal rental value and fair rental value. The municipal rental value is given in the problem as 7,000 per month, right? And you have to convert into yearly, you will get 84,000. Now fair rental value means rent of similar house. He has given 10,500 per month. You convert into 12 months for a year. You will get 1,26,000. Higher of this two. Higher of this two. Higher of this two. That is 1,26,000. That is called ERV, expected rental value. Expected rental value. Now, step 2, we compare the expected rental value with actual rental value. Now, he has let out his house on monthly rent of rupees 12,500, but in the month of Feb, the tenant has not paid the rent, and he was asked to vacate the house. In the month of March, the house was vacant. That means you have to calculate the rental value for 11 months because 1 month house was vacant. So monthly rent is 12,500 per month into 11 months. We'll get 1,37,500. This is 11 month rent. Now out of 11 months, 1 month he has not paid the rent. That is called unrealized rent. That is called unrealized rent. So 1 month rent which is not paid by the tenant, that is 12,500. You have to subtract from 1,37,500 minus 12,500. You will get 1,25,000 is the actual rental value. Is the actual rental value. Once again repeating, you have to find out. You have to calculate for 11 months rent. Per month rent is given 12,500. You have to convert into 11 months, multiply into 11 months, because in a year, 1 month is vacant and 1 month he has not paid the rent. So you have to convert into 11 months rent. First calculate 11 months rent. The 11 months rent includes unrealized rent. Then from that value, you get the value 1,37,500. You have to minus the unrealized rent. Then you get actual rental value. You will get actual rental value. And higher of these two, 1,26,000 and 1,25,000, higher of these two will become 1,26,000. That is called the GAV before vacancy loss, because the houses remain vacant for 1 month. What is the vacancy loss? That means he has let out a monthly rent of 12,500. 12,500 is a vacancy loss. You have to subtract from the GAV. You will get gross annual value after vacancy loss. That is 1,13,500. So this is how to compute gross annual value. Right now, in this problem, he has not given standard rental value. The standard rental value is given in the step 2. You have to compare with the standard rental value and expected rental value. You take least of the two, lower of the two, then go for the step 3. Now, in this problem, they has not given standard rental value. Hence, we have escaped from that. So, GAV will be 1,30,500 less municipal taxes, or you can call them as local taxes, or you can call them as sewerage taxes, or you can call them as conservancy taxes. Okay. Now, please remember, we have done a lot of blunder in the second internal examination. If municipal taxes is given in percentage, remember, if municipal taxes is given in percentage, you have to calculate the percentage on municipal rental value, not on gross annual value. Understood? If the municipal rental value is given, the municipal taxes is given in percentage. Let us say, for example, suppose municipal taxes he has given, instead of amount, has given 10%. So this 10% municipal taxes you have to calculate on municipal rental value, not on gross annual value. What is municipal rental value? 84,000. On 84,000, you have to calculate 10%. You'll get 8,400, not on the gross annual value. Okay, that is one important point you have to keep in mind. The second important point is municipal taxes has to be paid by the owner or by the assessee. Then only you can subtract from the gross annual value. If it is paid by the tenant, ignore, please ignore if it is paid by the tenant. Right? Suppose if it is partly paid by the tenant, partly paid by the owner, take the owner part only. Lot of blunders were done in second internal examination. Again, repeating once again, municipal taxes given in percentage, calculate on municipal rental value. And remember, municipal taxes should be paid by the owner or assessee, not by the tenant. If it is paid by the tenant, ignore it. Don't subtract from the gross annual value. And if municipal taxes is due or outstanding, ignore it. Don't subtract from the GAV. Right? Municipal taxes are given, sewerage taxes are given separately. You have to add these two and to calculate. Okay, you have to calculate on municipal rental value. Or you can call them as conservancy tax. That means you can say it's a drainage tax or sewerage tax. If rebate is given, you have to subtract the rebate on municipal taxes and put the net amount. Please make a note. This is very important part. The municipal taxes, if given in percentage, always calculate on municipal rental value. And if municipal taxes are paid by the owner, then only you have to subtract from the gross annual value. If it is paid by the tenant, ignore it. Right? Now, you will get NAV 97,500 less reductions under section 24. There are two deductions. One is standard deduction, section 24A is equal to 30% of NAV, 30% of 97,500, you get 29,250. And B, interest on loan. Now, in interest on loan, even if it is due, you can allow reduction of section 24B. So due, in the problem is given due is 6,000, paid is 12,000. Even if it is due, we can allow reduction for interest on loan under section 24B. So 12,000 is already paid, 6,000 is due, total 18,000. Total deductions is 47,250, and from 97,500 you subtract 47,250, you will get 50,250. So this is the how to compute income from house property. Right? Got it? So please remember, in municipal taxes are given percentage, always calculate on municipal rental value, not on gross annual value. And municipal taxes are paid by the tenant, ignore it. Ignore it. Right? You can say municipal taxes or local taxes or sewerage taxes or conservancy taxes. Suppose separately has given cigarette tax or conservancy tax, you have to add to municipal taxes and percentage you have to calculate on municipal rental value. Or if the amount is given, add these two amount, you can directly subtract from the gross annual value. Got it? So there are mistakes you're committing every time. Okay, if tenant does not pay the rent, if tenant does not pay the rent, what you do is that is called unrealized rent. That is called unrealized rent. You have to subtract from the actual rental value, unrealized rent. And the house is vacant for some duration. You have to calculate, you have to subtract from GAV, you have to subtract vacancy loss. They will get a, this is called actual gross annual value. So we can say it is called the actual gross annual value after vacancy loss. So this is still how to calculate income from house property. Please make a point. Please hear the video. Listen carefully. It's a very easy. You can score maximum marks in the income from house property, right? If municipal taxes is due, ignore it. But if interest on loan is due, you can allow deduction. Please don't ignore it. But you can allow deductions if interest on loan means housing loan. You're paying, you're taking housing loan, you're paying interest on that. If it is due also, we can allow deduction at section 24. Right? Got it? Right? So this is how to compute income from house property. Similarly, next problem. I'll share the next problem. So I'll share the next problem. Yeah, there's the next problem here. I'll read it then. Yeah, this is the next problem here. I'll read it, then I'll explain how to do this. Next, this is I'll post you in the WhatsApp group, right? Now, that is 12th B. Mr. Samachalam has house property in Sainikpuri. During the previous year, he occupied the house for 3 months for residential purpose, and thereafter he let out the house on monthly rent of rupees 12,000. Okay, that means for 3 months he has used as residential purpose, own purpose, or self-occupied purpose, and the remaining 9 months he has let out the property for a tenant. Okay, he has given the property on let out. So therefore, if partly self-occupied or partly let out is given, you have to take complete duration, complete year as a let out property only. You have to treat as a let out property only. Remember, again, once again repeating, if in a year, partly it is let out, partly self-occupied, so you have to take the complete year as a let out property only, not self-occupied. Got it? Now, he let out the house on a monthly rent of 12,000. He has given municipal rental value 90,000 per annum. Rent of similar building in the same locality, that is fair rental value, is given 10,000 per month, right? The expenses paid by the owner, they give insurance. Now, first you have to calculate gross annual value. How to calculate gross annual value? Now, to compare step 1, MRV and FRV. MRV is given 90,000 per annum. FRV is given nothing but rent of similar house. That is, how much is the rent of similar house? 10,000 per month. 10,000 into 12, you will get 1,20,000. 90,000, 1,20,000. Higher of these two is called 1,20,000. That's called ERV. You have to compare ERV with actual rental value, because in this problem again the standard rental value is not given. So therefore, what is the actual rental value? You have received rent from tenant for 9 months only. You have to convert into 9 months. You multiply into 9 months. Monthly let out rent is how much it is? 12,000 into 9 months, because the remaining 3 months has self-occupied. So how much you received rent from tenant? 1,08,000. But higher of these two, 1,20,000. So GAV is 1,20,000, and you have to deduct municipal taxes. These are expenses paid to the owner. Insurance, ignore it. Interest on housing loan, you can deduct from the, you can show in the under section 24B. Municipal taxes, now they have given municipal taxes partly paid by owner 6,000 and partly by tenant 3,000. We're taking only owner's payment, not the tenant payment. Owners have paid municipal taxes 6,000. We're deducting from the GAV. Don't take the tenant payment, right? So you'll get NAV 1,14,000, and the remaining expenses you have to ignore it, right? Insurance you have to ignore it, right? Now interest on housing loan due is 2,000. Even if it is due, you can allow deduction for interest on housing loan. Now he paid 24,000 interest on housing loan. Yeah, I'll just make it here. This is 1,20,000. Then he paid how much he has paid interest on housing loan? He has paid 24 initially. You can read the problem here. Interest on housing loan 24,000 and due is 2,000. So we can combine these two, or 24 here, 24 plus 2, 24,000. This is actual paid plus 2,000. Total deductions will be under interest on housing loan section 24B will be 26,000, right? So, and what is the total deductions? 26 plus 34,200. How much it comes to? I'll check with the calculator. So, 34,200 plus 26,000. So you will get 60,200. We'll change it 60,200, right? And from 1,14,000, you deduct 60,200, you will get 53,800. This is the income from house property. So I'll just make it to 53,800. So this is the way how to calculate income from house property. So once again, I'm repeating it. So first you have to calculate GAV. So GAV you have to calculate using 3 steps, because in this problem, the 2 problems are not given standard rental value. So we can have only 2 steps here. Now GAV is, what is the GAV? 1,20,000 less municipal taxes. But is paid by the owner 6,000 is NAV 1,14,000. 30% of NAV, the 30% of 1,14,000, 34,200, right? Is it right? 30% of 1,14,000, 34,200. So I'll check it with calculator. 1,14,000 into 30%, 34,200, and interest on housing loan actual paid is 24,000, due is 2,000, and add these two, 24 plus 2, 26,000. Total deductions section 24, that's 60,200, and from you have to reduce from 1,14,000, you will get income from house property, right? So other expenses like insurance or whatever expenses you have to ignore it. Only take the municipal taxes or local taxes or sewerage taxes or conservancy taxes. You have to take amount is given, you take the amount, percentage is given to calculate on municipal rental value, right? So this is the how to write the working notes. So I explained the 2 different problems for different angles, and how you will understand by seeing the video. So any doubts can WhatsApp me in the group. I'll be available to take any time at any moment. Okay, thanks a lot. So thank you very much.